All right, welcome back to day 12. Today, we're going to talk about a skill that honestly separates the people who make it in the market from everyone else. So let's get right into it. I want you to just read that and let it sink in for a second. Most people lose money not because of the stock they picked, but because they don't get the environment they're in. The problem isn't always you, it's the playground you're trying to play in. I mean, you've felt this, right? You have a strategy that's absolutely crushing it one week, making you feel like a genius. And the next week, you use the exact same strategy, and it's just loss after loss. What changed? Not the strategy, the market condition did. And that is the problem we are solving today. So yesterday, we looked at the cold, hard data. We saw that most retail traders unfortunately lose money. But listen, today is where we start to fight back. And the very first step is to learn how to read the room, to understand what the market is actually doing, beyond just up or down. Now, here's the good news. This isn't super complicated. For all its chaos, the market really only operates in three distinct ways, three different modes. And if you can learn to spot which mode you're in, you are already way, way ahead of the crowd. So what are they? Just three: the trending market, the ranging market, and the one that causes the most headaches, the kangaroo market. From this day forward, your new number one job, before you even think about a trade, is to ask, which one of these are we in? Okay, let's break down the first one. This is the one everybody loves to talk about, the one that makes all the headlines, the good old trending market. A trending market is exactly what it sounds like. The price is moving with a clear purpose, in one direction. In an uptrend, you see this beautiful staircase. A higher high, then a little pullback to a higher low, then another higher high. Just look at the Nifty's monster rally from 21,000 to 25,000 in 2024. It wasn't a straight line up every single day, but was there any doubt which direction it was heading? Not really. And this is absolutely crucial. In a trend, your job isn't to be clever and trade in and out. Your job is to have patience. The biggest mistake is getting shaken out by a small dip, only to watch it continuing roaring higher without you. Patience is what lets you capture the big, meaty part of the move. Now for the second mode, and this is probably where the market spends a lot of its time, we're talking about the ranging, or what some people call a sideways market. Just picture a ball bouncing between the floor and the ceiling of a room. That's a ranging market. Price is trapped, it has a floor it can't seem to break, that's support, and a ceiling it can't get through, that's resistance. And it just bounces between them. You might remember in mid-2024 when the Nifty was just stuck. For weeks, it felt like, between 22,000 and 23,000. That's a classic range. And here's the complete mental shift you have to make. In a trend, direction is king. But in a range, the little up and down moves are just noise. They're meaningless. The only things that matter are the levels, the floor and the ceiling. The game is played at the edges. Okay, and now for our third and final mode. And I want you to pay close attention because for beginners, this is without a doubt the most dangerous one. The kangaroo market. So why kangaroo? Well, because the price jumps up violently and then comes crashing right back down. It's all chop with zero follow-through. You'll see a huge green candle one day that gets you all excited, and then a giant red one the next day just erases it all. Breakouts look promising for a few minutes, and then they fail spectacularly. Remember that wild volatility in the Nifty around the 2024 election results? That's a perfect kangaroo market. And I can't stress this enough. This is the environment that just chews up trading accounts. It's a trap. It lulls you in with what seems like a powerful move, and as soon as you jump in, it snaps back the other way. In this kind of market, the best trade is often no trade at all. Your only goal is to protect your capital. Okay, so we get it. Trending, ranging, kangaroo. But how do you tell which one you're in right now? Looking at a live chart. Well, let's build a simple little checklist. Think of this table as your diagnostic tool. Look at the direction of the price. Is it clear or is it going nowhere? Check the highs and lows. Are they making progress or just bouncing around? Look at the India VIX. Is it low and calm, like in a range? Or is it spiking all over the place, like in a kangaroo market? Same with things like FII flow. Is it consistent or is it erratic? Use these clues together to diagnose the market's health. And this is maybe the single biggest mindset shift you can make. We love to get mad and blame the market, call it irrational, call it rigged. But just for a minute, what if the market isn't wrong? What if we just brought the wrong tool to the job? Here's how this plays out all the time. Someone learns a great trend-following strategy, but they try to use it when the market is just stuck in a range. What happens? They keep buying breakouts, and every single one fails. And what do they conclude? This strategy is broken. No, it's not. You're just trying to use a hammer when you need a screwdriver. So, from this day forward, you're going to build a new habit. It's a pre-trade routine. Before you even dream of hitting that buy or sell button, you have to ask yourself one simple question first. That's it. Just ask, is this market trending? Is it ranging? Or is it that choppy kangaroo? Just answering that question honestly, based on the evidence, will stop you from making so many bad trades. It forces you to play the game that's actually happening, not the one you wish was happening. So please, stop the endless search for the holy grail strategy. It does not exist. The real skill is not finding a more complex strategy. It's about having a simple plan for each of these three environments and knowing which environment you're in right now. Be honest with yourself for a second. Have you ever had a trade setup that worked like an absolute dream on Monday, and then you took the exact same setup on Tuesday and it just completely blew up in your face? If you're nodding right now, well, now you know why. The setup wasn't the problem. The market's mood had changed. And that is a wrap on day 12. Tomorrow, we are going to build directly on this idea and dive into one of the most painful, frustrating traps the market can set for you. We are going to be talking all about fake breakouts. You know the feeling, right? The stock smashes through a huge level, you get excited and jump in, and then it immediately reverses, slams right back down, and traps you. Tomorrow, we're going to break down how to spot them, and more importantly, how to avoid getting caught. I'll see you then.